Hi, everyone. Good evening. First of all, thank you so much for standing by so patiently. We were a bit delayed due to some technical glitches, but apologies on the outset. And thank you once again for joining us on this Saturday evening to talk about the importance of RRG and how you can use RRG to upgrade your trading strategies. I'm Karunya Rao. I will be your host for the day. And before anything else, let me first toss it over to Rohit Srivastav. He's the founder of India Charts and Strike. Rohit, thank you for joining us. You are bringing RRG, relative rotation graph, here for all of us in India. So, on behalf of the trading community, I mean, we're all very excited. I can see all the comments that have been coming by. Everyone is very eager to know how soon they can start using RRG and what is it that they can what kind of benefit that they will get by using RRG alongside strike. So first up, I want to know from you, Rohit, in the Indian context, how important a role can RRG, a tool like RRG, play? Firstly,
No, this is really big. We've had this vision at India Charts of empowering retail investors, and all the work we've done is in that direction. I think RRG is a fantastic tool which has been used by portfolio managers and fund managers around the world to really try and beat markets. And retail investors in India are now going to get access to that across all the Nifty listed stocks and sectors, which is going to allow them to really be able to take the right decisions, increase their weightages on particular stocks or sectors, reduce weightages on stocks and sectors, and be able to outperform in a significant way. Most fund managers, we know this, we hear so much about it that they find it hard to beat the benchmark indices. That is most of their job. But I believe that individual investors can actually do a much better job of investing, because they can take larger allocations to certain stocks and sectors. But what they don't know how to do is make that choice. Where should they really go? And RRG is a tool that's going to really allow them to do it. I think I have to be really thankful for Julius de Kempenaer to have associated with us and taken this big leap of faith to take it to the Indian investor base. So they should also be both thankful and looking forward to using it. It's already available on Strike. What you're going to be learning today and the upcoming series is how to make the most use of it directly from the horse's mouth, the creator himself. And the big achievement that individual investors will really have is getting over the biggest issue that they faced over the last couple of years. We've heard about rotation over and over again. We've heard that ये sector नहीं चलता है. Moment you buy something, it stops performing because they're probably late in buying it after it's already moved. But now you should be able to identify what is going to start outperforming before it even happens, once you understand how sector rotation really behaves. So I think it's a huge insight, and it's visual. That's the beauty of Strike. Everything that we've done on Strike makes it visually possible for you to look at data. And RRG was a big tool in that direction for people who are running portfolios, investing in the market, have a basket of stocks that they're watching. They can create their own basket watch list and execute RRG on top of it. But let's really get down to it. Let's start learning from Julius himself. How do we do it? What are the steps we need to take? And how should we really beat the market? So I think that's what this is all about. And we're all going to get a huge lot of wisdom from these episodes.
come on board and RRG is entering the scene in India, in the Indian trading landscape. So take it away from here on and tell us how we can leverage it to sort of, be better at our trading strategies.
Right on to you, Julius. I think mics need to be unmuted.
Yeah.
And I should unmute myself. That helps a lot when I speak to people. Yeah, thanks everybody for being here on your Saturday evening for you. I'm really excited to partner with Strike and Rohit and his team, of course, and present RRG to you in India. And what I'd like to do in this session is to give a introduction on RRG, what the philosophy behind it is, and why it is a tool that investors can use to their benefit, and how it can help you to actually hopefully make better trading decisions. So if we can bring up the presentation. So I think you guys need to bring up that. Yeah, there we go. Well, I guess by now you know who I am, so that is good. And starting off this presentation, I wanna put this number in your head, 1,225, and we'll give a little bit of a build up, and you'll see that number coming back in a few minutes, and then hopefully you understand why RRG is such a time saver for you. If you start investing, and pretty much in life, it's all about choices. Life's all about choices, but if you're an investor, you need to decide which markets you're going to trade, which sectors, which stocks, how much money you're going to trade. If you want to trade internationally, there's a ton of decisions that you need to make as an investor. And that landscape can become very cluttered and very busy. And hopefully, RRG will help you to get a little bit more insight and oversight into what you're doing. So, as a quick primer, before I start talking too long, this is how an RRG looks. And the rest of the presentation, we're gonna build up, and we're gonna try to make clear what this all means and how you can use it to your advantage. Now, if you start as an investor, I call this the investor's decision tree. Basically, let's start simple. You have a bag of money, and you need to decide whether you want to invest in bonds or in equities. It's just an example, but it's a very simple choice: bonds or equities. You could probably look at those two charts and then figure out what your preference is. Now imagine that you add one more layer to that equation. Let's say that your choice is in equities to invest in either the US, in Europe, or in Asia. And you'll have the same choice, the same options on the bond side. Now it becomes a little more difficult because you need to compare US stocks versus European stocks and versus Asian stocks. And you need to compare Asian stocks versus European stocks. So with every layer that you add, the decision tree becomes a little bit more complicated. And in our traders toolkit, in our technical analysis toolkit, there's really only one tool that helps you to decide between two securities, and that is relative strength. And it's not the RSI, it's not the relative strength index. It is what is also called comparative relative strength, where you compare one security with another, and that helps you to decide whether stock A or stock B is the better choice. And that's where relative strength, comparative relative strength comes in. Now, why is that important? Because in relative strength, and the bottom chart here is what I call raw relative strength. It's the comparison of a specific stock or a specific sector versus a benchmark. And here we have Nifty CD, that's consumer discretionary, compared to the NSE index. And the interpretation of this line is very simple. So when the line moves up, that sector is outperforming the Nifty. When the line moves down, the sector is underperforming the Nifty. And when the line moves sideways, it is moving in line with the market. Those are all three choices that you have. That's pretty much all there is. So we're interested to figure out whether that relative strength line is going up or down, or maybe sideways. That's what we're after. That's what we like to find out. And this all started when I started in the financial world as an analyst and a portfolio manager. A lot of comparative relative strength was visualized using a chart that's on the screen right now. That is pretty much a bunch of sectors in this case, anchored some period back, very arbitrary, and then at the end we can say here like, oh, the realty sector beat the market. But when you look at that blue ish line, you can see that it only really started to outperform at the start of 2023. So when it started to move up, and before that, it didn't really do much. By the way, guys, is my mouse pointer visible on the screen, or am I just playing for myself? Everybody went for a cup of tea. That's also cool. So what I'm trying to point out is here that that realty sector moved up, but from September 2021. Hi, Karina.
Julius, hi, hi. I was trying to speak. Your presentation is visible and everybody is posting a lot of comments. So we're all
Okay.
listening, we're all able to watch it. Just a quick message to the audience. Guys, we are taking note of all your questions and queries. Julius will be answering all of those at the end. So please wait patiently. Let him finish his presentation, and then we'll come to each and every of your questions. Julius,
Yes.
back to you.
So one question more. Is my mouse pointer, is that visible when I point something out on the screen? Can people see that? Can you see my mouse moving?
Um, not really, no.
Okay, then I know that I need to explain what I'm showing. That's
Okay,
cool.
yes,
No
please.
problem at all. So we were talking about the realty index and how it started to really move, let's say at the start of 2023. Before that, there were other sectors that were doing a lot better. That purple one, which is the automobile sector, handsomely beat the realty sector. And just basically anchoring it to a fixed period in time is not really going to help investors to um, pinpoint trends in relative strength while they are there, as we just saw. So this chart, I call this a spaghetti chart, because it's very hard to figure out which sector is where and when it started to really outperform. So what you really want is to pick up trends when they start emerging. And that is a challenge. It's a challenge in price charts, but it's even more a challenge in relative charts. So um, this this slide should actually be very nicely built up, and I can only show the end result, the starting result, but I'll try to explain what's happening here. So we just saw that investors' decision tree where we had bonds and equities, and then we moved to regions, which added an additional layer with only 3 choices. And now we're adding, let's say, sectors. And what happens if we add sectors to the equation? Now, let's just assume a very simple sector landscape where we have 10 different sectors. And if you're looking to get the best of the best and you want to look at what is outperforming, you actually have a lot of choices. And in a landscape of 10 sectors, your choices are a matrix of 10 by 10. I hope you agree. So 100, there's 100 blue blocks. Those are all your possible choices, all your possible combinations on the screen. Now, obviously, when you analyze relative strength, the diagonal here, I don't need to analyze, because when I compare sector 3 to itself, that's obviously not a real comparison. It is, that's 1. So you can actually deduct or take away that diagonal line here where all the comparisons with themselves are. Then the next step, when I have looked at, say, sector 4 on the vertical axis against sector 3 on the horizontal axis, I have also seen sector 3 on the vertical axis versus sector 4 on the horizontal axis. Similarly, when I look at sector 8 on the vertical versus sector 6 on the horizontal, I've done 6 versus 8 on the other side. So the bottom half of that square can also go. And then what remains are 45 different combinations, because this is 100. I can subtract the 10 that are in the diagonal, and then I can lose half of that. So that means that there is 45 possible combinations left. Now that means if you want to do all those comparisons on an individual chart, that you have to browse through 45 different charts, because they're all, remember, just told you, they're all one-on-one comparisons. So 45 charts. Now 45 charts probably doable if you want to put in the work, but imagine that you have a stack of 45 charts, or on your computer screen you got to flick through 45 charts, and you have found that, hey, chart number 3, hey, this combination looks pretty good, and then number 6 is pretty good, and number 13 and number 15. But at the end, it will be very hard to actually process all of that in your head. So I needed a solution for that, because it's a very complicated landscape, and you get a ton of different combinations. So if you have 10 gig sectors, that's 45. 10 times 10 is 100, minus 10 in the diagonal, that leaves me with 90, and I need to divide it by 2. So I have 45 different charts to look at. The industry groups in gigs is 16 times 16, 256. I can deduct 16, leaves me with 240, divided by 2 is 120. Now your Nifty 50 includes 50 individual stocks. That means that you have 2,500 possible combinations. You need to deduct 50, because you don't need to compare Tata Steel with Tata Steel. So you got 2450, and you can divide it by 2. But nevertheless, you have 1,225 individual charts that you would need to look at to figure out what the best charts in the Nifty 50 are. Now imagine going through 1,225 individual charts and still remember which ones you liked and you didn't like. It's a challenge. It's a challenge. So it's going to be very difficult.
Julius, I just want to request you to sort of explain this again. I'm seeing some comments live on our YouTube feed, and people are finding it a tad bit complicated to understand. So if you could go through the calculation bit again. You've muted
I think
yourself,
yeah,
Julius.
Julius, you muted yourself. But
Sorry, yeah.
so I just want to jump in very quickly on some of those comments. I think essentially people think that we are already talking about the RRG tool. So let me just highlight what Julius is really explaining here is the amount of work it would really take you to do to understand how 50 stocks in Nifty 50 are going to perform the rest 50, right? There are some questions where people said, okay, how do I find out the best stocks to invest in? The answer is that you will need to compare each stock in the Nifty 50 with the next one and see which one is relatively strong to the next one, and then the next one and the next one. And if we look at all the permutation combinations, guys, you're going to have to look at 1,225 combinations. So what RRG is really going to solve is you're not going to have to look at so many combinations. You look at one chart and figure it out. I think that is the short of what Julius has just explained to you.
Absolutely.
And let's just take it from there. Yeah.
Yeah, absolutely. So that is exactly what it was. And I was, when I muted myself, I was started to tell a story that when I was working, because where does this come from? How did this arise? And I was explaining that I was working on a trading floor as an analyst. And as a technical analyst, your universe that you need to explain to your fund managers is way bigger than your fundamental counterparts, because they have only a very limited amount of stocks. So when I prepared a call with a fund manager, I would pick a number of sectors, a number of stocks, and basically wanted to present that to them. And what would happen, a very typical conversation would be like, hey, I'm calling up George, and George, listen, I'm looking at these chemical stocks and these food and beverage stocks, and I really think blah blah blah. And then George would come back and say, no, 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 Julius, this week is technology week. Tell me, what are your best 5 picks in technology? And obviously, I hadn't prepared technology for that pitch because I had only a limited amount of time and space. So I didn't do that. So I needed something to answer that question. And as Rohit perfectly explained, the number of choices is enormous. So how do you get to the answer? What are your best 5 stocks? That is a very difficult question to answer. And that's what I was trying to solve. And that's where this whole combination comes from. And in a 10 by 10 universe, it's 45. And then when you go to the Nifty, you have 50 times 50, 2,500 divided by 2, 2450, 1,225. So indeed, 1,225 individual relative strength charts combining all the possible permutations in that universe to figure out what are the best 5 stocks. Not going to happen, guys. Not going to happen. Not in a million years. Because even if you would do the work to browse through 1,225 slides, you probably wouldn't be able to kind of in your head bring that all together and come up with the best 5. So that is a problem. That was the problem. Now, as I said, classical relative strength 1,225. So what we need to do is we need to bring this in a more broader context. And those of you who have seen me before may know that I have a military background in the Dutch Air Force a long time ago when I was young. But one of the things that I picked up there, which is really important and really helpful in investing, is something that the military call situational awareness. Basically, that means knowing what is going on around you. And every military operation has what they call an overwatch unit. Armed forces on the ground usually have a little group of people that are finding an elevated level where they can oversee what's going on. Right now, they use a lot of drones for that. In the Air Force, we've got these AWACS planes, airborne warning and control systems. Those are the big Boeings with the big domes on top, basically big radar. And they can just beam down and figure out what's going on the ground. And I think that's the best way to describe what RRG does for you. It provides you with that radar image from 30,000 feet, looking down and figuring out what's going on. So that's why we say that RRG is providing you the big picture in one picture. And that's essentially really what it does. Now, again, this RRG here, these are the 50 stocks in the Nifty 50. This single chart here shows you 1,225 possible combinations. We'll dive into how to read it in a minute. The one problem, or the first problem that you need to solve when you start working with relative strength, because relative strength in itself is not very difficult. So this is a relative strength line here that looks at this sector, CNX, PEC, and you see the relative value here, that numerical value. It's really small. It's 0.46. If you keep that in mind, 0.46, that is the number, that's the numerical value of this relative strength line. And I hope you agree that this is actually a pretty nicely looking relative strength line because the trend is up. So this sector has been outperforming and probably still is outperforming the Nifty. Now look at the next one here. So here is, I can't read my own slides. Great. This is a CNX IT. So it's the IT sector. It's actually right here on top. Now, this line looks a lot worse. This sector is not outperforming. It's underperforming. Line's moving down. But look at the number here, the numerical value, 1.47. It's way higher than the one that we had on the previous slide. So the takeaway here is that the numerical value of that raw relative strength line, I cannot use that to rank my universe. I can't say because the relative strength value of IT 1.47 is higher than the one of CNX PSE, it is better, because it's clearly not. PSE is doing a lot better than IT. So what we need to know is the direction, is the trend direction of that relative strength line. So you need to go through a permutation to actually figure out what the trend is in that relative strength line, and it needs to be comparable across a universe, because otherwise you still wouldn't be able to answer what the best and what the worst sectors or stocks are. So in terms of a definition, and I see a lot of definitions floating around on the internet and everywhere, and some of them are okay, others are plain wrong. And what I feel should be the definition is that a relative rotation graph shows you trends in relative strength or trends in performance of multiple securities in a universe against a common benchmark and against each other. So not only against the benchmark, only against each other. So be careful. They do not show relative performance as such. I get a lot of questions asking me, hey, Julius, this sector or stock is in the leading quadrant, but in the last 2 weeks, it lost 5% of its value. That is not what an RRG is, and that is not how you should read it. And hopefully, in 20 minutes' time, you will agree with me, and you will be able to actually read it properly. Now, how is that built up? We have two metrics. Out of all that work, two metrics emerged. And one is the JDK-RS ratio, which is the metric of relative strength. The JDK-RS ratio measures trends in relative strength. So it doesn't measure relative performance purely. It measures trends in relative strength. Now, the story here is that this was the first part of RRG, which I developed when I was working as an analyst. And I used that as my ranking system. This was my answer to the question for the fund manager, like, what are your best 5 stocks? I came up with what is now known as the JDK-RS ratio, and I used that to rank my universe. And if someone asked me, what are your best 5 stocks or your best 5 sectors, I would just use that RS ratio number to give them like the best 5 or 10 in a sector, best 10 sectors, best 10 stocks, whatever. You can apply that to anything. And this all happened back in 2000, 1999, 2000. And you may know, you may be aware, or if you're too young and you didn't invest at that time, that was the time of the dot-com bubble. The NASDAQ index in the US went to 5,000, went almost ballistic. The market would never come down again, euphoria all over the place. And then all of a sudden, technology started to roll over, the NASDAQ came crashing down, and markets showed that they would actually come down. And at that time, I got an email from an Italian hedge fund manager writing to me, hey, Julius, this time your system didn't work too well. And I was looking at it and I was like, he's right. It's like, when you said something and that it's like, there's a bit of discussion here. So I started to figure out, what do I need to prevent this to basically catch me by surprise, because that's what it was. So I started playing around with momentum and rate of change, because that rate of change is a leading indicator in technical analysis. Before a trend changes, the rate of change, the rate of ascent of that trend will first slow and then be stable and then go the other way. So I started playing around with that. I came across the same problems as you will find when you start with raw relative strength and the values not being able to be compared across the universe. So they go through the same sort of algorithm as the RS ratio, and that became the JDK-RS momentum. What that essentially does is it measures the rate of change, the rate of ascent and descent of that trend. And then all of a sudden, I had two metrics. And I started to play around with those, and at some stage hit on a scatter-like diagram and started to plot it. And what happens is that when you do that, the center of the chart here is your benchmark. So for you guys, that would be the NSE index or the Nifty 50 or a sector index, whatever you're comparing it against. Then all the securities that pop up in the top right-hand quadrant, they're in a relative uptrend because they're So by the way, this is 100 by 100. So the axes are crossing at 100. So when they are above 100, it means that the trend is up. If they also have momentum above 100, it means that that trend is still being pushed higher. Now we've learned that rate of change will change first. So the first thing that will happen is that that rate of change will drop. It will drop below 100. The trend is still up, but it's losing its momentum. And in that case, the security will drop into the lower right hand, which we call the weakening quadrant.
So,
Now,
Julius, there was a very basic question which I'm seeing on
yes,
YouTube, and which
go
is
ahead.
they wanted to know the difference between relative strength and relative performance.
Oh, it's the same. I think you can kind of I think relative strength. I don't think there is a you when you plot the lines, they look exactly the same. It's just another way of talking about it. um, maybe relative strength measures the trend in relative performance, measures the trend in relative strength. I don't think there is a very clearly difference between relative strength and relative performance. People use it
Synonymous.
intermittently,
Yeah.
Could
that's
you
why I use that.
could you give an example just to sort of make it more clear to our viewers?
An example of what?
Uh,
Of relative
uh,
strength.
to explain, yes, yes.
All right. So yeah, good point. I should have probably put that. Well, I mean, I can actually explain that very clearly because we have a slide. So here, this is relative strength. This is
Yeah. So
relative performance.
someone also asked me that what was that 0.46? I understand it's the ratio between
Oh,
the two indices,
it is,
but someone just asked that what is this number?
that number is nothing else than CNXIT divided by NXE or NSE index here.
Yeah, the
So that's
Nifty
it.
50. Hmm.
That is, and that is immediately that is the problem because this sector here is trading at 34,000 something, and the other one, which was at 0.46, is trading at 10,000. So that's roughly 1/4 of the value of that
Mm.
sector. So clearly that number is a lot higher or a lot lower, but it doesn't say anything about the direction of the trend. So this is relative strength, relative performance. This sector now, I mean, you can see that it is also going down, but it is going down faster than the NSE index. And the reason why relative strength and relative performance is so important for professional fund managers is because 90% of these guys have one job, and that job is to outperform the index. A fund manager needs to beat the index, and it's a pretty perverse job because what it also means is that you put your money with that fund manager, he loses 5% of the fund, but the benchmark loses 10%. And then what will happen is that the fund manager is a hero because he outperformed the market by 5%. Market went down 10%, he went down 5%. That is plus 5% versus the market, which is good. And that is, I think, the biggest difference between retail traders and professional traders. Pretty much every professional trader, every professional fund manager does not have the possibility to go 100% cash or put his portfolio in a lot of cash when he is thinking that the market will come down, because people paid him to get exposure and beat the S&P 500 or the Nifty index. So they don't have the liberty, though they don't have the flexibility to move a lot of that portfolio to cash. Whereas a retail investor, it's got all the flexibility in the world. If you, as a retail investor, feel like, hey, the market's coming down, you can just sell all your holdings and just sit in cash until you feel the market will improve. So for a retail investor, that's a very big advantage over a professional fund manager because you've got way less restrictions. I've sometimes I jokingly explain to people that the benchmark for a retail investor is much harder to beat than for a professional fund manager, because what I've learned is that the benchmark for a retail investor is when the market goes up, they want to beat the market. So when the Nifty goes up, they want their portfolio, their stocks to go up faster than the Nifty. If the Nifty goes down, they don't want to lose any money. So then basically your benchmark is a flat line. You don't want to take the other side of the equation. The fund manager's got two sides of the equation. He needs to beat the market when it goes up, and he needs to beat the market when it goes down. But when the market goes down, he is allowed to lose money as long as it's less than what the market goes down. A retail trader feels that he's not allowed to lose any money. So when the market goes down, his benchmark goes flat, and that is super difficult to beat. So even for retail traders, RRG will help you to figure out what is doing better than the market. Karunya.
Julius, you were giving an example. So our viewers have a question. If one sector is, let's say, leading in a quadrant in a weekly time, but that same sector is lagging in a different quadrant on a monthly time, then what is the result trying to tell me? How do I interpret this?
We go to look at RRGs, and I will tell you exactly what that will do when we look at the chart itself. Let me finish this one. I think we're here.
Sure.
So the deterioration continues. You go into lagging, and then all of a sudden, you got the same story on the other side. It picks up. You move into improving, and then when the improvement continues, you got the sector rotation. So this was like this was like the epiphany, the aha moment. Like, hey, everybody was always
Hmm.
talking about sector rotation, but this chart actually shows me that markets are rotating, and they are rotating around the benchmark. So this is the first one here. So you can in the beginning it was only dots. It was only a single dot, and then I started to add previous observations, and that's when the
Hmm.
tail basically came to life. So this has only a few tails, and then you got more, and then you got like again a type of spaghetti chart. So this is very hard to read. You don't really know what's going on. And then at a later stage, and I'll tell you a little bit of background here. Maybe some of you have know Dave Keller, who is my colleague at stockcharts.com. And I know Dave for a very long time. He was the managing director at Fidelity, big fund manager in Boston, one of the professional fund managers, one of the first to start using RRGs, or they weren't really called RRGs at the time. And I had this very basic plot at the back of my reports that I send out every month. And then I was on one of my calls with Dave, and I was talking to him, and then he all of a sudden he tells me, Julius, that report that you send out every month, that last page, I print it out and I stick it on my whiteboard. I was like, Dave, why are you doing that? He's like, I mean, you got the print out, you got it on your computer. Why would you print it out and put it on your whiteboard? He says, well, I'll tell you. After a while, and then this is, you've all been in high school and you've all been bored in math class or whatever class, and you remember when you had your notebook and you were drawing this little man with a head and a body and 2 feet and 2 hands, and then you flip the page, and on the next page, just on the other side, you draw the same man, but now his hands are a little different than his feet, and then you continue until the end of class, and then at the end of class you could like take that whole stack of paper and then that little man would start to walk across the bottom of your page. And Dave was explaining to me that, like, when I print that out, I can go through the stack and I can see the rotation through time. And that is where the rotation or the animation was coming from. So, and I actually, you got more questions. I have the animation in the screen. If you bring back, yeah, there we go.
But
There
does
we
it
go.
does it always happen in a clockwise direction? A couple of comments were actually popping up asking
Yeah,
this.
it always moves in a clockwise direction, although it may not always look like that. In reality, it does. And when we go to work on the platform, I'll explain to you why that is, and I probably can find a pretty good example of where nothing appear. What's the saying? Nothing is what it looks like. Not always. It's not always what it looks like. I guess that's the word. Oh, here this doesn't play. Well, we'll go to the platform. The interpretation, because now it's getting interesting, guys. This is what you want to know. This is where how do you interpret, how do you read this RRG? And I tell you, when I first had it, I thought I had like this was my pot of gold at the end of the rainbow. This is the one rule that we need. When it moves to the right hand side, that's where you buy. When it moves to the left hand side, that's where you sell. I sit back, relax, and enjoy the ride. Unfortunately, that did not happen. So how do you what do you so there are no really hard trading rules. There's no signals, if you wish, but there are initial rules of thumb and ways that you can look at an RRG. So in the top right hand corner, remember, those are the stocks that are in a relative uptrend, and that relative uptrend is being pushed higher, so you definitely want to hold those stocks. Now when it moves into the bottom right hand corner, um, they're still in an uptrend, but they're losing relative momentum. And what happens here is that you look for sells or rebuys. And I need to explain that because the question that Karunya just asked me is like, do they always rotate in a clockwise fashion? And the answer is yes, they do, but not always through all quadrants. And that's important. So what you see quite regularly is that a tail moves from leading into weakening and then back up to leading without hitting the lagging and the improving quadrant. And what that means is that it is a very strong relative uptrend. Now you got to imagine, you all know the definition of an uptrend, higher highs and higher lows. And what you will see when a tail moves from leading into weakening and then back up, it's a move from a higher high to a higher low and then back up to a higher high. That little dip, if it's big enough, will show up on an RRG as a rotation that goes leading, weakening, back to leading. So when you see tails inside the weakening quadrant, but curling back up, moving towards leading, those are really strong tails. Those are really strong relative uptrends. And what it actually means is that that stock or that sector is embarking on the second or the third or the fourth leg of an already existing relative uptrend. Now, when it moves from improving into leading, that's where the trend change happens. That's where the trend changes from a downtrend into an uptrend. And obviously, that's a way more riskier situation than when you start a second or third leg in an already established uptrend. So the risk of those rotations inside weakening going back up is a lot less than the risk that you're embarking when you move from improving into leading. Obviously, the potential profit is way bigger when you manage to catch that trend change, when you catch the move from improving into leading. The same happens on the left-hand side. So the bottom left are the stocks in a relative downtrend. You want to avoid those. You're not interested in those. And then when they start to move back up into the improving quadrant, you are looking for buy opportunities or resells is when they move into improving, they roll over and they start to move back down. That's the sign of a very strong relative downtrend and the second or the third leg in that already established downtrend. Now, as I said, at first I thought like, hey, the crossover is where you want to do it. Apparently that is very late, and that's on the next slide actually. So if you want to talk in terms of buy and sell signals, crossing over from improving to leading is what I call a conservative buy or a conservative sell signal, because before that happens, you've already seen quite a bit of movement in the stock or in the sector before it actually drags all the way over. So when I figured that out, that I was late, I thought, well, you know what? Let's move to moving from lagging into improving as the buy signal and moving from leading into weakening as the sell signal. You're way earlier. True, you're way earlier. But I've just explained that the weakest rotations or the strongest rotations are the ones that continue to rotate on the right-hand side or on the left-hand side. So buying here, you're buying against the trend. So it's very aggressive, potentially very profitable, but it inheres a lot of risk. So this is a very aggressive buy, and it's a very aggressive sell. The truth, probably somewhere in the middle. What I personally have learned to like is I kind of draw sort of an imaginary diagonal across those quadrants. So from the top left through the crosshair to the bottom right. And when it crosses that line, that's when I start to become really interesting, because that means that it has, when it's crossing over very close to the benchmark, you only need a little bit of momentum to drag it over to the right hand side. And when it's at a lower RS ratio reading, you need a lot of momentum to drag it over to the right hand side. Again, there's no right or wrong. There's no stone hard rule in this. So it's a chart reading. And what I explain to people all the time is, some traders are very short-term orientated and they trade breakouts above a 5-day breakout. Someone else is a little bit more conservative. They want to trade 50-day breakouts. Obviously, the guy who trades a 5-day breakout is much faster, but at much more risk, because the odds that the 5-day breakout will fail and go back are much bigger than when it's a 50-day breakout and it moves back. If you talk in terms of moving averages, for example, a lot of people use moving averages. If you want to trade when a price crosses a 5-day moving average, that is very early, but very risky compared to someone who trades a 50-day moving average. It takes a lot more time, but you're way more assured that the trend is moving in that direction. So again, it's a charting format. There are no stone hard rules. Someone asks me what are the trading rules of an RRG. I usually tell them what are the trading rules for a bar chart, or what are the trading rules for a candlestick chart. They're different for everybody. Depends on your investment horizon, depends on your risk appetite, how aggressive you are, what is your goal, and so there's no right or wrong answer to that, actually. Let's go play around on the platform, and I need to present. I need to share my screen. I can do that, and my window will be strike, share. Now you should be able to see the strike platform, won't you? Yeah, we do. Great. So here is an RRG of the sectors in India. And let me do a very quick introduction. So when you bring up the RRG chart, you will see the canvas with the tails, and you can select the universe on the left-hand side. So there's a whole list of predefined RRGs for every sector. So these contain the stocks in the Nifty 50, in the automobile and banking sector. So you can go around those, and you can create your own groups. So basically, that's the generic watch list functionality. You bring it up and you can create your own list, and that's what I did for the Indian sector. So this graph here draws the RRG for the Indian sectors, and it brings the NIFT. Yeah, Rohan, go ahead.
Yeah, so just to make it simple, because I think some people find this overwhelming, maybe we could just take 4 or 5 sectors on the screen and then show them how it's moving between the quadrants.
Yeah, so what I can do here is I can actually select them all off. And let me select a few that I think are interesting. So realty is really good, media is really good. Where's automobiles? That's right there. That's interesting. These are good. These, let me take this off. Interesting. These are all good. Ah, let me. This is a good way to do it, probably. So. Let me just take a few here.
Yeah, that should be sufficient to
Yeah.
understand. Yeah.
Let me bring this back up. So now you see all of them. what I wanted to show in the presentation, but because it was static, it didn't work, is if you click the play button here. So we got 3 months worth of history loaded. If you click the play button, you will actually see the rotation of the tails through the various quadrants.
So, guys, those of you who have been waiting patiently, this is the moment of truth for you to see how it actually works. So far,
Exactly.
you've understood the theory behind it, the logic behind it. There were a couple of questions which we can address later around, what is RS and what are the two ratios,
Yeah.
what are we really comparing. But I think what you just saw when you actually animate it is you can see each sector moving between these four quadrants, which is leading, weakening, lagging, and improving. And what Julius really explained in his earlier slides is that when you see that happening, you are prompted to start thinking about what decisions you should really be taking, which is, should you be holding on to those stocks? Should you be reducing your weightage, which is selling something if it's weakening, or completely avoiding something which is lagging? Or maybe start thinking about adding something which is in improving and then moving into the leading segments. So those are the decisions that you're quickly able to make when you can actually see what is going on. And in fact, you can even see the tail. You see the arrow at the end and you see the tail, which means you know where it is coming from. You know exactly where the sector was in the last four sessions and where it is going from there. So that's the entire setup. You can further explain, Julius, how should one really think about this in the
Yeah.
in the
So
in the sectors which are also showing up on the chart? What is it really telling us?
yeah. So if we just stick to the ones that we have here,
Yes.
when we move around, I hope that everybody agrees with me that you can see the clockwise rotation in general. I mean, this is the theory is that it's clockwise, and in reality it always is, but it's not always like a nice circle. They go in, they make little quirks every now and then. Remember that I told you about sectors that are rotating on the right hand side or on the left hand side? Look at the realty sector here. So if I scroll back, realty, um, so that moved into leading. So this was in April 2024. The realty sector moved from improving into the leading quadrant. Now, when I grab the slider here at the top and I move through history, I can see how realty moves, and now it starts to lose a bit of momentum and it crosses into weakening. And remember how I said, watch when they rotate back up. So that's happening again here in it's May, probably May, yeah. And then it takes a little longer. Boom. Now it starts to really move back up. And then it crosses back into the leading quadrant here at the end of May, 22nd of May. And you move further and it moves into leading and it rolls over and it loses a bit of momentum. And then it starts to rotate back up. And now it's still there and moving further ahead. So this is a very strong move in terms, and it's actually continuing to make higher highs and higher lows in terms of relative strength. So if I bring that up as a and I'm learning this, so just learn with me. Realty, you bring up the chart and you go to an interactive chart, and then what you want to do is you want to add a ratio chart, and we're adding the NSC index. NSC index, apply, and now you will see the relative strength of the realty sector versus the NSC index. And what you need to do is you need to compare that line. So this is when I'm going to duplicate this one. So my chart, come on, baby. Oh, this one is still there. I'm going to use this one with my RRG. Where is the realty? So here's realty. Where did it start to move? Change the trend. So here, this was April 2024. April 2024. Let's make this a little higher. We're here, April 2024. So we're looking at the relative trend that is from here. So you saw that little dip. So the algorithm picks it up right here after that dip and basically keeps you on the right-hand side of the equation all the way through. And then you see these little glitches. That's where that tail moves into weakening for a very short period of time. So that's happening at the end of April. The end of April. That's the move here. That's a flat move. So when the line moves flat, remember we're comparing everything to everything. So when the line here moves flat and that tail starts to move down, it means that in that universe, other sectors are actually moving up. That's what it's telling you. And then it picks it up again. So here, somewhere in the middle of May, we start to rotate back up. That's right here. So that's second half of May, 22nd of May. We start to move back up and we start to pick up that trend again. That's right here. And then we got this little thing. So don't be fooled by a little dip into the weakening quadrant because it's not necessarily a sell signal, as you can just see. What I've learned is that the closer that rollover happens to the 100 level, the more important that break is. And another thing that you can learn from, now I need a little bit more tails. I think that here were a few that are, these are all, this is to go the other way. So all these tails are 5 periods, 5 trading periods long. Now compare the length of the tail of the realty sector and the media sector with the length of the tail in IT, healthcare, or here in PSI. It's a big difference. They are spanning the same period of time, but the length of the tail is much different. And what that tells you is that the longer the tail, the more power there is behind the move. And you can also see how the length of the nodes is changing. Here is a good example. So IT is a good example. Let me highlight that here. You can see how this is from every dot is 1 day of trading because this is a daily chart. So it's 1 day of trading. And you can see that here, this is a very long one. And here you got very short periods of time here also. But the bigger the moves, the bigger the power behind that move is actually. So that's another thing that you can learn from these tails. If we use the realty sector, you can see another example here that when it's shrinking, it turns around, and then all of a sudden, look at these 1, 2, 3 very big moves. So this is 3 days of time we're shooting off into the leading quadrant. So the tail length can also give you some more information. We'll talk about more about those what we call derived indicators and interpretations next week. But I just wanted to give you this as a quick example because, as Rowan said, it's I can imagine that things are getting a little bit overwhelming if you've maybe seen an RRG somewhere but never understood how to actually read them and where the value comes from. So I'm hoping with these webinars to actually explain to you and give you a little bit more background on how to read them and what's important and what's not, and what actually is an important rotation, what is not such an important rotation, and the stuff that you can play with. So I think the most important takeaways for now is, first of all, that the RRG as a whole will give you that higher level overview. It will pinpoint your attention to the areas of the market where things are happening. That's one thing. It will help you to distinguish which sectors or which stocks in sectors are really driving the market or really driving the sector. That's a second thing. I hope you've learned now that how to read it, what the rotations actually mean, and how to interpret them. That they always go clockwise reminds me I need to show you a clockwise thing. And the difference between the time frames. I'll get back to that question in a minute. And then the length of the tail. I think that's enough information for this week to take away and to digest. Maybe this week, spend some time on the platform playing around. Now, when you come next week, maybe you have more questions for me.
Exactly, because that practical, experience and practical knowledge is something that will help them understand what are the big problems, if any, they're facing, or what they would like to know better about this tool on the Strike platform and how to leverage it to the best possible case scenario. But Julius, there are lots of questions. Should we get on to that?
Let me, because the question already was a different position on the monthly or the weekly RRG.
Yeah.
Basically, I'm going to translate that question into different positions on an RRG of a different time frame, because we do have a lot of different time frames. If you so here's the Nifty 50. Let's load that up, and then I'm looking at a daily. Oh, by the way, what my personal preference, but feel free to play around with it, is that the more securities are on the screen, the shorter I like my tail to be, because I do have the possibility to actually scroll through time, so I can know where it was. And the other very super cool thing is that when I highlight it, I can single out, so I can still see where everything is, but I can highlight something that might be of specific preference. Now, this is the daily RRG. Now let's move to one time frame higher. So instead of daily, I'm going to move, and let's look at, let's pick one sector, Ultra Semco. The cool thing is that I have absolutely zero idea what all these sectors are, but I'm just gonna talk about it. So it's in the green, so it is here. What is that? Cement company, building probably. So on the daily, Ultra CEMCO is inside leading, and it's basically pushing further into it. Oh, it's a very nice tail. Looks very nice. Now, when I move to the weekly, so we're going to go one time frame higher, and now we need to find Ultra CEMCO. And now it's here. It's inside improving. Now, what you need to know is that it works exactly the same as a weekly or a daily bar chart. So a move on a weekly bar chart, which on a weekly bar chart is just a string of bars moving higher. When you zoom in with a daily chart, you may actually see higher highs and higher lows. So because within these bars, there is a little high-low rotation, which is not visible on the weekly or on the monthly bars, but which is visible on the dailies. And that is exactly the same on an RRG. So here we have the weekly tail of Ultra CEMCO, and you see that it has just entered the improving quadrant. It's still on the left-hand side. It's just entered the improving quadrant. Now, the daily version, as we saw, was already right here. So let me make it even more clear. So here, let's bring this to, okay, so five weeks. This is 5 weeks of relative rotation for Ultra CEMCO. I'm going to duplicate this screen. And again, this was 5 weeks. So I'm now going to do Ultra. Where's my Nifty 50 here? Ultra CEMCO. That's right here. That 5 weeks on this graph here. So this is 5 weeks. I need to go to 25 days. So now, let me just do this. Just do this. This is 25 weeks. So this rotation right here is exactly the same as what you see right here on the weekly. So the daily is much more sensitive, much more noise, while the weekly is a little bit more gradual and moving around. And when you do this for a monthly, you will get the same situation. By the way, this also gives me a good opportunity to explain something else, because someone said, is it always clockwise? And I said, yes. But you see, someone, I know that you were all now thinking like, hey, dude, this is not clockwise. This is just going like, boom, the other way. And here also, boom, the other way. What happens here is that the rotation is so fast that it is actually going clockwise, but it's going too fast to be shown on this daily time frame. So I'm going to do something challenging right now. I'm going to load up because Strike has made available 30 and 60-minute time periods for the rotations. So I'm going to load up a 30-minute RRG. And what we need to do is, because this is 1, 2, 3, 4, let's do 60 because maybe it's too it won't be too long. So 60 periods, and I'm going to look for ultra CMCO. So here you are. This is the 60-minute period, and you can see how this is actually all rotating clockwise. Whereas on that daily, we saw that weird hook, and you can now see that this is actually, I think that weird hook was right here. This was the, so the answer to the question, is it always clockwise? Yes, but sometimes it doesn't show like that because the rotation is so fast that it isn't picked up by that particular time frame. But when you go one time frame lower, you will see the clockwise rotation. Let's do some questions, Karunya. I can continue talking about RRGs for a very long time, but we're already over 1 hour, so I don't want to steal your entire Saturday evening. But shoot at me.
Let's quickly address like 2-3 questions. And of
Yes, please.
course, we are doing a webinar once again on the 21st on Friday, 5 o'clock India time. So we will be
Yes.
addressing more queries then. Very quickly, couple of questions that I want to ask. One is by Karthik. He's asking that for certain stocks and sectors, there are no indices. For example, the chemical sector. So how to check these kind of sectors which don't have formal indices on RRG charts?
I would, if there is no sector index, you can just compare them to the Nifty 50 or the NSE index. Basically, you can, in all honesty, you can stick in any benchmark if you wish.
Julius, could you hear me?
I can hear you. Can you hear me? I can hear you.
Yes, I can.
Okay. Yeah. So
You
the
could hear
question
my
was,
question, right?
yeah.
Okay.
So the question was about the chemical sectors. They don't have a real proper chemical sector index. What do I do with that?
Index. Yes.
Yeah. So I would just go for the stock market, so the Nifty 50 or the NSE. And in theory, you could use any benchmark into an RRG. Sometimes it just doesn't make any sense, but in theory, it can be done. So try to find the benchmark that suits the purpose best. And if you use the Nifty, then you will see the relative rotation against the Nifty and whatever you've plot on that universe. And it will give you a pretty good idea on what's going on. By the way, I'll predict to you, but that if you would load a group of chemical stocks on an RRG, so you create a watch list of chemical stocks, and you plot them against the Nifty 50 index or the NSE index, when the sector is strong, you will see all these stocks moving in the same direction because they're all in the same group. So as a group, they will move in a similar direction against the Nifty. It will happen if you, let's say, the IT stocks. If the IT sector is strong and you plot it against the NSE, you will see all technology stocks move in the same direction. When you plot all these stocks against the IT sector, you will see it spread out because some stocks are outperforming the IT sector and some are not. But when the sector is strong, generally, all those stocks will so they will all move in the same direction. I'm sure we will have another webinar where we'll talk a little bit more about the composition of universes and the different benchmarks that you can use, and then it becomes all clear. But for this particular question, I would say just go with the Nifty 50, and you'll get a pretty good idea about how these chemical stocks are moving.
Okay, one more quick one. Veera is asking, some of these stocks have long tails, some have short. How is the length of the tail? One should look at it. How should it be understood? And what is the significance of this radius rotation that you were talking about?
Yeah, so I think I've already answered that question when I was talking about tail length and I was showing the different examples. So the basic interpretation is the longer the tail, the more power behind the move. Long tails have more power. Basically, the tail length is nothing else than adding up the distances between the nodes. When those distances between the nodes get longer, the tail length gets longer, and that means that there is more power behind the move.
Okay. And before concluding today's webinar, Julius, one quick question is how to create a watch list for RRG the next 1 week. If our viewers want to create a watch list, play around with it a bit and come back more prepared for the next webinar. Give us some suggestions, please.
Yeah, so let me see if I can replicate that because I did it together with the guys. I think it's where I probably need. Where was that watch list thing, guys? Oh, here, I think. I am sure somebody and Stry. Oh, here, watch list. Hang on, select. Here's watch list. Add. So now I can add a watch list. I'm adding. I need to do a new one first. Create watch list. So here you go to watch list. Go to create watch list. Strike dot demo. Create a watch list, and I can then add. Well, stocks here are stocks. So 1, 2, 3. Add to watch list, and now I've got a watch list of 3 stocks. You can play with that. You can maybe add your own portfolio. Always a good idea to have your own portfolio in a watch list. Plot that in RRG. You go to the RRG, and then under watch list, you will see Strike Demo. That's the one that I just created. It will load up, and here are the 3 stocks that are in my watch list. So easy peasy.
Great. Guys, please note these are not recommendations. It's something
No. This
Julius
is just
has prepared for a
a
demo.
wild guess. Yes.
Yeah. So thank you so much, Julius, for taking time out on a weekend, talking to our viewers. We had a lot of engagement, lots of questions coming our way, and hopefully on Friday we'll come back for more because and be more prepared as well. They would have had some exposure to Strike and using RRG on Strike. And Rohit, thanks to you as well for bringing Strike to India, such a revolutionary tool.
No, I have to really thank Julius for making it possible. And I can see there are a lot of unanswered questions around rotation, about resells.
Yeah.
There are questions like why is this resell and the buy in the same quadrant? I think let's get down to answering all of those questions in the next session so that people really understand what they need to do at each stage of this of the RRG. So look forward to everyone joining us again on Friday so that all your questions get answered in the next session.
Yeah, I think that
Friday, 5 o'clock.
Yeah,
Sorry,
so let me give it. So if you like what we just did, and I promise I will work with the team at Strike to get all the questions and then maybe group them a little bit and just address them in next week. So you got to come back if you want to hear the answer to your question. That's one thing. That's a good pitch for us to have those people come back. But also, please take some time, because I can talk 2 hours to you on a screen on RRG, but it's not the same as just taking the platform for a spin, play around and run into problems, run into questions, and then come back, because then what I tell you will make so much more sense than just me blurbing out like a lot of gibberish and like this is what you should do, and then you come back. I know it firsthand. I listen to someone who explains something, and then you sit there, oh, that's really interesting, but then you need to go do it. This is the only way to learn and practice to do it.
So let me just tell everyone that if you want to access RRG right now, simply go to web.strike.money. You can see that at the bottom. If you have never used it before, you do get a starting 7-day free trial. So you can get started completely free. Those who are existing users, they already will have access to RRG. So no problem there. And that's about it. So just get started, start using it like Julius said. And when you come back, you'll have much more, many more useful questions for us to put back to you. And we'll take them up. We'll also look at all the questions which are there, like Julius said. We'll group them together and we'll take up new ones which you face in actually using it based on what we've already told you. So let's take it from there. So look forward to everyone.
Please mark your calendars. Please mark your calendars. Friday, 4 p.m. India time. We'll be here once again. Julius will be talking to you live, answer your questions live, and we are, pressed on time today, but we will collate everything and get back to you in the next webinar, hopefully. Thank you once again, gentlemen, for joining us today to share your insights on Strike and how to leverage RRG on the Strike platform. And thanks to our viewers once again for tuning in. Thank you and have a great weekend.
Thank you, guys. See you next week.